So go on, comments on the what's it?
Yeah, well, I'm only interested in. There's loads of people in the Bitcoin on the Knots core one that are just like, yeah, run Knots, just generic stuff. It's like not very useful comments, but like the ones that are like, you've missed this or that or the other, I dig into that and I'm like, have I? Yeah, and that because that's what I've been learning about since, and that's the more useful stuff. Is where people are actually trying to educate or explain certain things. I find they can be useful. But
What's your updated view on it now?
the bottom line is a nothing burger. Like even at
Really?
the meetup, the two most techie ones there, that basically it's quite interesting though. One's got Knots. Well, he's actually got Knots and Core. I think we mentioned this, didn't we? He's running both, but he's not updating, and the other one's staying with Core, but he's not updating as well. So the bottom line is neither of them are updating.
Okay.
And they say very similar things to this guy who reached out to me, and we've honestly, whoever this guy is, he's got patience of a saint. The amount
Probably
of questions,
one of them. Probably one of them.
Oh yeah, yeah. No, I don't think it is. I don't. Well, he's definitely not. He's yeah, he's been in Bitcoin since like 2011. So I mean, that says it all really. Like he's going to be super techie, but he's answered every question, like everything that and I keep pushing back. I keep like saying, but what about this? Or what about it? And he keeps. He's probably repeated himself about 5 times. It's just like me internalizing something.
Well, that's very
comes
interesting.
back out.
Yeah.
A few days later, he's been. So, I feel like I have to stop messaging him now because it's just insane the amount of time. There was one day where we had back and forth like all day. I think it was. I released the video on Wednesday, and I think it was the Friday. It was literally my whole day was. Because he sent like an email first of all, and that's just slow. Like I didn't, and so he said, "Should we jump on Signal?" And then, and he just used a burner email account. He's deleted that whole email just to email me. This is how private he is. Wow. So I was like, "Would you just want to jump on a call?" Because I think I'm aware that this is taking a lot of your time. It was like, "No, I'm super private. I don't want to do that, to be honest." But in a lot of ways, it's very handy having it all in text because then I can go back through it, and you can. Whereas if if you just had an hour chat with someone, it would go in one ear and out the other, and you would forget half the stuff. So obviously you can record it or whatever, but still, it's it's been super helpful. But yeah, what the bottom line is, it's just got blown way out of proportion. Whereas he says the real risk now, like to be honest, there was no real threat of anything. Like everything that's possible to do with this update is already possible to do. So it's just, if anything, it's making it more expensive. Like no one's going to use it, basically, is the point. Because it's going to become more expensive to use the op return than inscriptions. So the only people that will use it are good actors. So it's like, people that actually don't want to bloat the UTXO set, which is what I used as the phone book expanding sort of thing, the analogy.
So why are people kicking off about it then? What is the issue?
I don't know, and I've asked him that as well, and like, obviously, but you just get into, and this is the thing as well. He's very good at staying on point and not speculating. You can speculate why people are creating FUD around it or having their own agenda or whatever. I don't know, and I'd like to think it's got me to run a node. It is, like, I think it's got a lot of people to run a node. It's got a lot of people talking about it. It's got a lot of people interested in it. So whether it's just purely because of that, and it's a good way to get people interested in it, I'm not sure. But I think the bottom line is it still is loosening spam policy. So the thing to really get your head around is the consensus level and the policy level. So consensus on Bitcoin is like the laws of physics, as in you couldn't build a house that floats because gravity is going to weigh it down. Like it's impossible to do. And that's the same with Bitcoin. If you try and put something in Bitcoin that doesn't agree with the consensus rules, it's physically impossible. Like there's no way that will get in. Whereas this is the issue. This is the point. of core is like that it is already happening. Spam is already happening at such a severe level, and it's bloating the UTXO set, which has gone from something like 4 gigabytes to 12 gigabytes. The reason that matters is because if anyone runs a prunes node, you still have to hold the UTXO set.
Okay.
So it's gone from 4 to 12 and it's increasing. So they're trying to give another way that doesn't bloat this UTXO set, where people can still put their junk or spam or files, whatever you want to call it, pictures.
Right, because it's happening already. So they're just trying to say, well, we're just going to
use this method, which is not as bad.
Yeah.
And leave the UTXO set alone. And the point, I think the thing is as well, because it's basically like a whack-a-mole situation. Yeah. Let me get it up. I was literally just going through this before we jumped on the call. So, so right now there are 7, as far as I'm aware, there might be more. There are 7 current known methods for storing data on Bitcoin. So basically spam. One is called the taproot inscriptions, which is the most common way at the minute. So in fact, let me get this link up because that will be easier to explain. Share screen. Also, just while I'm doing this, if you are listening to this, could you let us know if you like these like tangents that we go on, or if you just rather us stay to the book, or if you like a bit of a mix, you just like what we're doing, just let us know one way or the other. That's really helpful, so we're not just like wasting people's time or like
please
people.
Do be interesting to know.
So yeah, here, can you see this?
Yeah. So
this is already in the blockchain. This is like, so Ordiscam is basically, wow, there's so much to say. It's like, it's so hard to do. If you were just running a node, you would not see this on your node. Basically, this is a tool. Ordiscan is like a tool that's been built to take whatever this inscription is. So this is what it's called, as an inscription, which will basically be like, from my understanding, I might be saying this wrong. My understanding is that this is not just one. So you can see it's in creation block. This is the block that is in, but it's not just like you don't just update this image as this image into Bitcoin. They need multiple different like transactions. So this is why it bloats the UTXO set, because they have to do multiple different UTXOs and fake Bitcoin addresses. They're not fake, but they kind of are, because they're not really. They might store like 1 Satoshi in each one, basically.
Yeah.
So they're purely being created, and then they put them all together, and it creates this.
It's almost like a mod. They're trying to like.
Go on.
They're trying to like, like these gamers where they try and do things in game.
Yeah.
That shouldn't really. They try and find glitches, and they try and find things in the game, and they exploit those glitches.
That's
it's kind of like, well, obviously someone is at that level of technicality where they thought, well, Bitcoin's not. I'm just going to try and add this image to the blockchain because I can. I'm going to see if I can do it. And how I do that is I open X amount of Bitcoin wallets and I put 1 sat in each. And it's that kind of thing. It's just trying to.
That's exactly
trying to use it for things that it's not.
And then, but then the thing is, the reason
purely
is that
because
people can sell these. They
it's
sell
like, well,
these for.
I can do it. Do you know what I mean?
They call them ordinals or NFTs, whatever you want to call it, and they.
So this is what an NFT was.
Multiple Bitcoin, but you might just be thinking, oh yeah, but you're just taking one example. This is literally me going through this and just randomly looking. So I just look and be like, which one? That looks like quite high definition. That's got 195 kilobytes. The issue that everyone's freaking out about is this OpReturn storing 100 kilobytes. This is already double what OpReturn will even be at its standard. So at the moment, OpReturn does 80 bytes. That it will filters for anything less than 80 bytes. And people are like, oh, if you open up to 100,000, which is literally me just a few weeks ago, then you're going to be able to store child sexual content, like, but this is already possible. Like if anyone's going to do it, they can already do it. And what you're saying, that can you not see this? Like this is, I'm not technically gifted. Like I literally just gone to this tool which has already been built, and people are already doing this. Here's another one, 364 kilobytes. Like, do you know what I mean? Like people are worried about this thing, and it's already NFTs? Possible. 360, yeah. And so people could sell these for whatever. And you see what I mean? It's not like I'm not spending ages finding these, cherry picking these examples.
Keep going down. Let's have a look at.
See, this one's only 538 bytes. You can tell it's not that.
Yeah,
it's not that a good picture. But if you look, you see that this is a good picture. 384 kilobytes. So you just keep going down, and there's tons. It's not like
it's mostly Pepe's. It's mostly memes.
Well, for this bit, but not.
Let's have a look at some of these rare Pepe's.
So that's 392 kilobytes.
So is this what an NFT is?
Yeah. So this is a Bitcoin NFT or ordinal or whatever you want to call it. It's junk on Bitcoin basically, and this is the issue. And this is these are only in blocks that are recent. Creation block 915,000. So that's like today. Just recently. I could literally go back. You just keep scrolling and you keep getting more. And this is the point.
They're numbered. It looks like there's 100 million of these by the looks of it, because if they're numbered chronologically, there's 106 million of these.
Exactly. And people are freaking out about something which is basically not even as bad as what people can already do. And that's I think that's why it's the nothing burger that techie people understand, but normal people don't, sort of thing. And I would class myself as the normal people, and it's only because having this for days of one-to-one chat with someone that understands this, I've been able to figure it out.
What was his name? Did he give you one?
It's Grumpy on
shout out Grumpy.
Yeah, but I don't know his name. Obviously he's very private.
It sounds cool.
Let me just show you this though. But my point, the main thing is, so at the moment, like I say, there are 7 different methods that people do this. So even if Core or Knots or your own node prevented taproot inscriptions, which to us, I'm not even sure if that is possible, but if you could create a filter to prevent that, they would just jump to a different one. So op return is the one that everyone's worried about at the minute. At the moment, it's only 80 bytes and they're increasing it. So they're like, but if you increase it, then you're going to allow all the spam to come in. But as I've just shown you, the spam is already happening. People could already do any of these attacks that anyone's worried about. It's already possible. The reason most people don't is because there's potential where it could get traced back to them. They could face legal consequences, moral reasons, like people, there's the same reasons as why people don't do that in everyday life anyway. But you could stop one way, you could stop the fake addresses, but then they're just going to pop up in the weakness signatures, or then it's like a whack-a-mole thing. And the issue is that for these, as you can see, even with Core V30, which is coming out now, this is months. This has taken months for them to approve. And then even when it happens, which is in October, supposedly, he was saying that probably only about 10% of all nodes within a year of this going live will even run this update. And in 5 years, maybe 50%. So the point is, it's really slow to implement these policy changes. Whereas these spammers can within one day create a new tool, go into a new system and create a new way of creating the spam. So do you see what I mean? Even when there's 50% running the op return, that still means there's 50% not running this thing, and they can find another worker, so they can just go to another node and relay their stuff around other nodes. And so that was the other thing. There's other nodes called Libra Relay or something, which I think was created by Peter Todd, who's one of
down at the bottom. It says Libra Relay,
Yeah, there you go. So, Libra Relay is already a way that already removes the op return. So this already exists on some nodes. So this thing that everyone's freaking out about is already being run by Libra Relay, and they can use it. People can do this exact thing already just by running it through those nodes, sort of thing.
Maybe you
And
should do another follow-up video on all this stuff.
It's so hard to put into like easy words, and it makes so much sense now. It's like this is why it hasn't been explained to normies, because it's really, really hard. You know, even that did what I just say kind of make sense to you, or like even that, is it still kind
to
of
to a certain extent? But a lot of this lingo is still above my head. You know, like
exactly
op return and taproot and all this stuff. This is all consensus rules, policy rules.
I'm trying to make like a technical glossary, and I'm trying to think like, how can I put this in without overwhelming? Like, what am I going to do? Like drip feed this in, and then people are going to be like, "What does this mean again?" You know,
it's
a
completely new language, really. So
exactly,
starting from the top would be.
And this is the issue: is at the core side of things, they are literally speaking a different language, whereas the not side of things are. I've watched like debates and things around this, and I even plugged it in to AI and sort of said, can you summarize who won this debate and why? And then also like, can you explain like who the best debaters were and give them a rating out of 10 and their tone of voice and things like that. The bottom line is Knots is talking about like bigger picture, more philosophical, more like Bitcoin is money sort of thing, like easier language for us normies to understand. Whereas Core talks about the technical points and all this sort of stuff that I'm just saying here. And it was really interesting because I was expecting AI to be like the Knots team one, because they've explained it much better. Whereas what they actually say is the Core team one. So the Core team has won the technical debate. It's like, it's unarguable. They're presenting facts, and that is what the debate is around. And so for me as a normie watching it, I was like, Knots definitely won that debate. Like, I'm 100%, I am Knots after watching this sort of thing. And this is kind of what happened to me originally. But then the more I've understood this and then running it through AI and stuff, and it's like, this is what the issue is that us normies just can't understand what they're saying.
Yeah.
Because they're saying all of these things, which is so confusing for us to get our head around. But hopefully, like, I think this is the key. I think if I can just present it like this, it's like there's multiple ways that spam can get in the minute. And this is what Core is saying. It's like a whack-a-mole thing. You whack one down, they'll just pop up somewhere else. You whack that down and pop up somewhere else. You whack all 7 of these down, they'll just create another one. Like that, they'll just be, you know, like there's Libra Relay, or they'll create another node themselves that they can just relay this junk around to, and then it gets into, and then they'll create a mining system, and they'll just do it. And so this is the point that Core are making, is like, we're just trying to make a slightly less bad way of this stuff getting in, so that good actors can use it. It's like it's a literal nothing burger. It is literally nothing. There's no debate to be had, and this is why they're so blasé. They're so flippant. They're probably getting to the end of the tether.
Makes sense, yeah.
And it's like, this all makes so much more sense now, and it probably explains why there's doing things like,
probably explains why a lot of people were criticizing them as like arrogant and this kind of thing.
Exactly.
But it's like, they do actually know a lot more about this stuff.
And this is for them. This isn't just happened. This has been going on for like, there's been 10 years of this. This whole issue has been going on for 10 years.
So if they come out and be like, look, you wouldn't understand, you know, kind of thing, you know, people will be like, you know, what are you talking down to me for? Like, I understand that. But actually, I'm a Bitcoiner, and it's like, the point is, we can't verify this ourselves. We can't. We have, like they say, don't trust, verify. But unless you understand code and can read like complex stuff, you are not going to understand it. So it's like, oh my god, the light bulb. But in a lot of ways, it's actually made me realize this isn't that much of a big deal. Whereas what this guy has said to me and made me realize what the real threat is actually this division that's happening. And then
the op return, this change to op return happening, and then someone being so bitter about it, doing the exact attack that they're saying, and being like, see, told you, if you didn't do op return, then this wouldn't have happened. And so it's almost creating an attack threat because of the division and because of like, it's almost like football fans.
Yeah.
Be it, meeting up and then getting into a full-on fight, like whereas
over nothing,
over nothing. Like, whereas if they didn't meet in the same pub, if they just stayed separate, sort of thing, or if you just didn't have a side, which most people didn't this time a few months ago, because this wasn't even a thing. If you didn't have this Knott's core.
That's interesting. Yeah, exactly. We're on Team Bitcoin, not Team anything else.
Exactly. And so that's hopefully the message that I can get across in this next video anyway. I mean, that only took me 20 minutes. I feel like that I kind of explained that all right in that 20 minutes, but
but we've lost every listener. Every listener's
that's the thing, isn't it? It's like, I don't know how I'm going to do it. I don't know how I'm going to. And I've basically just got to admit I was totally wrong as well. That's the thing.
Well, yeah, sometimes
I was literally at the peak of peak of stupidity of the
Dunning-Kruger.
Yeah. Anyway, should we get into it?
Share screen, BTC. That we weren't on that one, were we? We were on capital market socialism. Whew. This is going to be a tough read. Shall I do it this time?
Sure.
Right then, capital market socialism. While most understand the importance of the price system to the division of labour, few get the crucial role it plays in capital accumulation and allocation, for which we need to turn to the work of Mises. In his 1922 book, Socialism, Mises explained the quintessential reason why socialist systems must fail, and it was not the commonly held idea that socialism simply had an incentive problem. Why would anyone work if everyone got the same rewards regardless of effort? Given that lack of application to one's job was usually punished with government murder or imprisonment, socialism arguably overcame the incentive problem successfully, regardless of how bloody the process. After a century in which around 100 million people worldwide were murdered by socialist regimes, this punishment was clearly not theoretical, and the incentives to work were probably stronger than in a capitalist system. Yeah, work or we'll kill you. There must be more to socialist failure than just incentives, and Mises was the first to precisely explicate why socialism would fail, even if it were to successfully overcome the incentive problem by creating, quote, the new socialist man. The fatal flaw of socialism that Mises exposed was that without a price mechanism emerging on a free market, socialism would fail at economic calculation, most crucially in the allocation of capital goods. As discussed earlier, capital production involves progressively sophisticated methods of production, longer time horizons, and a larger number of intermediate goods not consumed for their own sake, but only produced so as to take part in the production of final consumer goods in the future. Sophisticated structures of production only emerge from an intricate web of individual calculations by producers of each capital and consumer good buying and selling inputs and outputs to one another. The most productive allocation is determined only through the price mechanism, allowing the most productive users of capital goods to bid highest for them. The supply and demand of capital goods emerges from the interaction of the producers and consumers and their iterative decisions. In a socialist system, government owns and controls the means of production, making it at once the sole buyer and seller of all capital goods in the economy. That centralization stifles the functioning of an actual market, making sound decisions based on prices impossible. Without a market for capital where independent actors can bid for capital, there can be no price for capital overall or for individual capital goods. Without prices of capital goods reflecting their relative supply and demand, There is no rational way of determining the most productive uses of capital, nor is there a rational way of determining how much to produce of each capital good. In a world in which the government owns the steel factory as well as all the factories that will utilize steel in the production of various consumer and capital goods, there can be no price emerging for steel or for the goods it is used to produce, and hence no possible way of knowing which uses of steel are the most important and valuable. How can the government determine whether its limited quantities of steel should be utilized in making cars or trains, given that it also owns the car and train factories and allocates by diktat to citizens how many cars and trains they can have? Without a price system for citizens to decide between trains and cars, there is no way of knowing what the optimal allocation is and no way of knowing where the steel would be most necessary. Asking citizens in surveys is a meaningless exercise because people's choices are meaningless without a price to reflect the real opportunity cost involved in trade-offs between choices. A survey without prices would find that everyone would like their own Ferrari. But of course, when people have to pay, very few choose Ferraris. Central planners can never know the preferences of each individual nor allocate resources in the way that satisfies that individual's needs best. Further, when the government owns all inputs into all the production processes of the economy, the absence of a price mechanism makes it virtually impossible to coordinate the production of various capital goods in the right quantities to allow all the factories to function. Scarcity is the starting point of all economics, and it is not possible to produce unlimited quantities of all inputs. Trade-offs need to be made, so allocating capital, land, and labor to the production of steel must come at the expense of creating more copper. In a free market, as factories compete for the acquisition of copper and steel, they create scarcity and abundance in these markets, for the prices allow copper and steel makers to compete for the resources that go into making them. A central planner is completely in the dark about this web of preferences and opportunity costs of trains, cars, copper, steel, labor, capital, and land. Without prices, there is no way to calculate how to allocate these resources to produce the optimal products, and the result is a complete breakdown in production. And yet all of this is but one aspect of the calculation problem, pertaining merely to the production of existing goods in a static market. The problem is far more pronounced when one considers that nothing is static in human affairs, as humans are eternally seeking to improve their economic situation, to produce new goods and find more and better ways of producing goods. The ever-present human impulse to tinker, improve, and innovate gives socialism its most intractable problem. Even if the central, so basically human nature there, the ever-present human impulse to tinker, improve, and innovate gives socialism its most intractable problem. Even if the central planning system succeeded in managing a static economy, it is powerless to accommodate change or to allow entrepreneurship. How can a socialist system make calculations for technologies and innovations that do not exist? And how can factors of production be allocated for them when there is yet no indication whether these products can even work? Quote, "Those who confuse entrepreneurship and management close their eyes to the economic problem. The capitalist system is not a managerial system. It is an entrepreneurial system," by Ludwig von Mises. It basically seems to me that this socialism, even kind of like just centralizing power and centralizing planning, and as it says here, like management, it's a very like anti-human system. Mm-hmm. It doesn't promote like human nature to flourish. Like human nature naturally seems, as it says here, like entrepreneurial. It's you tinker, you create, you innovate. This is what humans do by nature. So if left to their own devices, that kind of free market, free system would just naturally happen, you know, as
exactly.
As Seyfried was saying before, the free market doesn't need centralized tinkering because it's what humans do, but things like socialism seems completely anti-human. And it even said in the previous chapter, it was like, well, socialism, when it was tried to be implemented, cost the death of tens of millions of people who didn't want to go along with it because it's anti-human. They've got an issue with it. So how do we force people to go along with it? We've got to kill them. We've got to, under the threat of death, you work within the system or we'll kill you. That's the incentive, rather than a more of a free market. Well, why would I work? Well, because I can bring value, and the more value I can bring, the more I will get. Therefore, it incentivizes me to learn and hone my craft even more so. That just seems a lot more human of a system to live in.
I think the reason socialism can get, like, people can get on board with it is because, I don't know about you, but if you speak to about people in today's world, and people are like, there's so many idiots. Like, I think we spoke about, like when they go on YouTube and ask the general public real basic questions. And the point is, though, that only exists because of our current education system. Yeah. And this, we've spoke about it so much, this like suppressive, like, just do what you're told, don't think for yourself, that sort of thing. That only comes from that. And I think this is what people can't see, is that in an actual free market, that education system would look so different. There wouldn't be things like Ofsted and like these governing bodies which are telling you exactly what to do and checking up on you. And people are like, yeah, but if you don't do that, then how are schools going to be any good? And like, why would teachers care? And like things like that. It's like, because people care. Yeah. People's natural state is, like you say, is tinkering, is trying to improve, is trying to get better. That's what people thrive for. This is what people want to do. People want to better themselves naturally. It's just taken away from us because of like society and the current system that exists. That's what's happening. People are not naturally like what they are. We've had to learn to be this stupid. And
No, I was going to say I've got a couple of friends that were teachers, and you I know you were as well, but they were very good teachers, passionate about it, and after about 10 years, that kind of passion got sucked out of them, and they had to leave because they were like, what they thought was would be best for the kids and how they thought would be best to teach, they were just met with like brick walls of like curriculum that they had to do and so many hoops that they had to jump through. It just, after a while, the whole thing got like so demoralizing for them that they just had to leave. And I think it's teaching now as well. They were saying that the actual teacher itself has changed, because back in the day when I went to school in the 90s, there were teachers that have been there for like 30 years, 40 years. Like they were old, they were wise, they'd been doing it for decades. Those kind of people have kind of been a little bit squeezed out now. And now a lot of the teachers in the school, they're fresh out of university. They're like 18, 19, or whatever, 21 when you leave uni. They're fresh. And then like, you might hit 30 or 30 odd, like they were both, they left. So the actual teachers are getting a lot younger, because when you get older and wiser, they end up naturally leaving. They think, I can't do this. This is not what I signed up for.
It's burn and churn. It's a basic burn and churn. That's what they do. They burn and churn teachers. And the people that are left that are old are the people that just succumb. Like, I've seen it. Like, they're really the ones that just like, they literally count down. I honestly used to work with a guy who had like 102 Post-it notes on his wall. And I was like, what are those Post-it notes? I kept seeing him like take one off every now and then. I was like, what are they for? And he's like, that's how many weeks I've got until I retire. He was literally counting down weeks. Wow. Yeah. Like he didn't care. It was just like getting. And the other thing that I noticed as well is like, and to be fair, even when I first started teaching, like my first sort of 5 years,
then he finds out that his pension has been kicked back a few years, and he
Well,
adds
yeah,
a
this
few
was the thing.
post-it notes back on.
But yeah, he was kind of smart enough, to be honest. He knew. I really liked him. He just knew how to play the game. He understood what was going on, and he was like he was very good at his job as well. Like, you know, he was actually a great teacher. The kids really respected him. But he was like he knew that he just needed to. I think he had bought a few properties or something, and like that was his retirement plan, was to then go and live in Greece or something, and just, you know, live somewhere that's cheaper. And so yeah. But anyway, the other thing as well that I've noticed so much, like I said, my first 5 years of teaching, I was like learning everything. I was trying to make things as good as possible. I was without a doubt a better teacher in my first 5 years. And then the system gets you, and then it starts bringing you down. And then you're like, what is the point? And like all of that, exactly what you're talking about. Probably like the last few years, I still had the skills and stuff, and still had like good relationships with all the students and things, but I wasn't actively seeking to improve. Whereas I got paid more during those years. Like, you just get paid more the longer you're a teacher. So like you're saying, schools can't afford those older teachers because they just get paid more. They actively try and remove them, and they actively seek like newer teachers who cost less. Whereas that just makes no sense. Like, even one thing I suggested with my last school, I was doing their like after school activities. So I was full-time PE teacher, also doing the after school activities, like sorting all that out. And I could just see it was making them money. It was making, and I was like, why don't you just, this is taking up so much of my time. Like, why is there not a way to sort of reduce the timetable and I can focus on this? And then you don't even need to pay me anything like for this role. Like, so you got like a stipend, they would call it. You get paid X amount extra each month. So why don't you just give me like 5% of the profit? Like, I can literally see the numbers that are coming in, and then that incentivizes me to do a better job. And it's only 5%. Like, I might not even earn as much as what you're paying me now, but it incentivizes me to do better with that. And, you know, it aligns everyone's incentives. And they just have like, there's no common sense in schools at all. Like, there's no business sense. There's no like any sense anywhere. Like, they just like, no, this is how we do it. And it's like, why?
Yeah, it's just
like, just use your brain. Like, it's actually,
it says here,
I'm making it better for you. Like,
it's turned into a managerial system.
That is exactly it. Yeah,
it's just order followers. It's just bureaucracy.
It's tick boxing.
Kind of,
it's getting through the days. It's getting through the weeks. Getting through the term. Get to the end of the
policy.
year.
You know,
so much policy. So much jumping through hoops. So much paperwork unnecessarily. Like, paperwork for paperwork's sake. I remember doing a whole day's workshop. So one of the days, the inset days, whatever they call it, when the kids are not there, a whole day's workshop on how to use a green and red pen to mark books. They were teaching the teachers how to use the green pen and how to use the red pen and when to use it, and then doing like what tests with each other, and you send it back and forth. And it's like, do you think this really needs to take a day's worth of like our time? You know, when we could be planning great lessons for the kids who are about to start tomorrow. Like, this is not top of the priority for the teachers right now. You know, it's just it's bananas.
What's worse is that course would probably took like a team of people a year to plan and write, and they would have had a meeting.
They would have got paid a fortune for coming into the school supported by Ofsted or whatever, you know, but it's just total. There's so much junk in schools now. Whereas this is the thing, like, if it was a free market, that just wouldn't exist. If the school was bad, you wouldn't pay for your kid to go to that school. So the school would just close, you know. Whereas if a school's good, you'd want to get into that school. And that is the free market working. And the teachers would want to go to the good school. The best teachers want to go there.
Exactly.
They might have incentives, exactly like what I said, where if you're doing some sort of thing, it could actually make more money for the school, and you align your incentives with the teachers, with the students, with the parents. Like, you could even just, I've thought about it so many times, you could just create mini businesses. You've got kids that are there bored out of their mind all day every day, not wanting to be there. Financially incentivize them. Or like,
exactly.
Anyway,
start a little sweatshop.
It doesn't even have to be financial. Just
get them knitting.
Go to like old people's homes and nurseries. Like some of the kids absolutely love looking after the little kids, and like and that can happen within the same school. It's just like no one uses their brain. They're just so.
I'm sure
you've got to get through this random curriculum by this date, otherwise the kids won't get this letter or number on the piece of paper to then get them into the universities, to then get in debt, to then trap them to go to work for the rest of their lives.
I'm sure I heard somebody once, it might have been my mate who was a teacher, or it might have been, I can't remember, it might have been somebody that this happened to them when they were a kid, but they had a teacher on one of their lessons who was getting him to do like put letters in envelopes and seal the envelopes up. Like that was their task of the day. But this guy was getting paid like by whoever, this Royal Mail or this spam letter company to do this. So he'd brought it. Right, today class, we've got 1,000 letters that we need to put into 1,000 envelopes. We're going to have a great job today, guys. Put it in, lick the envelope, basically using his class on a day off to like, I can't remember where that, it was either somebody said that happened to them when they were at school a long time ago, or it was some sketch show or something. I don't know. I can't remember, but anyway, let's crack on. The point of this exposition is not to argue against the socialist. In fact, I'll read that quote again. Those who confuse entrepreneurship and management close their eyes to the economic problem. The capitalist system is not a managerial system. It is an entrepreneurial system. The point of this exposition is not to argue against the socialist economic system, which no serious adult takes seriously in this day and age after the catastrophic, bloody and comprehensive failure it has achieved in every society in which it has been tried over the last century. The point rather is to explicate clearly the difference between two ways of allocating capital and making production decisions, prices and planning. Just on that, like it says that, he says that nobody takes socialism seriously anymore. As I mentioned before, I've got a friend who's like big into it, but as you said, lots of people are just uninformed. And when I asked him about it, I was like, go on then, explain, sell it to me, sell socialism, sell communism to me. He doesn't, it doesn't actually have any arguments. And he says, what we should do is just get rid of money. And I'm like, what do you mean get rid of money? Like it's how would we live? Like we need a medium of exchange. It's like, oh, well, we'll just go back to bartering and go back to, I was like, it's not going to happen. It's not going to happen. Like we've always needed some form of currency, even in like medieval times. Like currencies just naturally arise because we need a medium of exchange.
So how would you live in your house then? Like what are you going to do? Like grow
but it was
like billion carrots and give it to someone for a house? Like what are you going to give?
We'd just get everything given to us for free and we wouldn't have to work. So it's like this guy's like 26, 27. I'm thinking, bro, it's literally a baby's view of world. It's literally a baby's worldview. In fact, you were saying your daughter, how old is your daughter? 4 or 5 or something like that? She's a lot more base than this guy. She's in touch with reality. Like, what do you mean get rid of money? It's like, we're going to get rid of money and then everybody's just going to get free money. I don't know. It just winds me up. But, he'll say stuff like, oh, you should read Karl Marx's Das Kapital. And I was like, well, have you read it? It's like, no, but, I know bits of it. That kind of, it just winds me up. That is my exposure to, a socialist in real life or a communist in real life. There's not, like, what is that? What is that? It's like people that think they know about Bitcoin, and they say, but they've never read one book on it. They've never listened to one podcast, but they know it's a scam, and, it's like, right, okay, it's not even worth talking to that kind of person.
That's the bit that just gets me with some of my friends where I'm genuinely just like, just I'm not even telling you to like buy Bitcoin, just look into it. Like, here's some things that you can check out. Bitcoin straight up. You can watch that.
Exactly.
There's literally just like 11 videos, and it will walk you through my whole skepticism, walk you through all of the potential threats and everything. And also then you can come to your own conclusion. And then from there, if you haven't got questions and want to dive in deeper, then you either haven't watched it or you're missing some brain cells or something.
While most of the world's countries today do not have a central planning board responsible for the direct allocation of capital goods, it is nonetheless the case in every country in the world that there is a central planning board for the most important market of all, the market for capital. A free market is understood. I mean, this is what Jeff Booth goes into, isn't it? He says you got these two dissonant things happening at the same time.
Yeah.
A free market is understood as one in which the buyers and sellers are free to transact on terms determined by them solely, and where entry and exit into the market are free. No third parties restrict sellers or buyers from entering the market, and no third parties stand to subsidize buyers and sellers who cannot transact in the market. No country in the world has a capital market that has these characteristics today. The capital markets in a modern economy consist of the markets for loanable funds. As the structure of production becomes more complicated and long-term, individuals no longer invest their savings themselves, but lend them out through various institutions to businesses specialized in production. The interest rate is the price that the lender receives for lending their funds, and the price that the borrower pays to obtain them. In a free market for loanable funds, the quantity of these funds supplied, like all other In a free market for loanable funds, the quantity of these funds supplied, like all supply curves, rises as the interest rate rises. In other words, the higher the interest rate, the more people are inclined to save and offer their savings to entrepreneurs and firms. The demand for loans, on the other hand, is negatively related to the interest rate, meaning that entrepreneurs and firms will want to borrow less when the interest rate rises. The interest rate in a free market for capital is positive because people's positive time preference means that nobody would part with money unless he could receive more of it in the future. A society with a lot of individuals with low time preference is likely to have plenty of savings, bringing the interest rate down and providing for plenty of capital for firms to invest, generating significant economic growth for the future. As a society's time preference increases, people are less likely to save, interest rates would be high, and producers find less capital to borrow. Societies that live in peace and have secure property rights and a large degree of economic freedom are likely to have low time preference, as they provide a strong incentive for individuals to discount their future less. Let me just get this book back up. Another Austrian economist, Eugen von Böhm-Bawerk, even argued that the interest rate in a nation reflected its cultural level. The higher a people's intelligence and moral strength, the more they save and the lower the rate of interest. But this is not how a capital market functions in any modern economy today. Thanks to the invention of the modern central bank and its incessant interventionist meddling in the most critical of markets, central banks determine the interest rate and the supply of loanable funds through a variety of monetary tools operating through their control of the banking system. A fundamental fact to understand about the modern financial system is that banks create money whenever they engage in lending. In a fractional reserve banking system similar to the one present over all the world today, banks not only lend the savings of their customers, but also their demand deposits. In other words, the depositor can call on the money at any time, while a large percentage of that money has been issued as a loan to a borrower. By giving the money to the borrower while keeping it available to the depositor, the bank effectively creates new money, and that results in an increase in the money supply. This underlies the relationship between money supply and interest rates. When interest rates drop, there is an increase in lending, which leads to an increase in money creation and a rise in the money supply. On the other hand, a rise in interest rates causes a reduction in lending and contraction in the money supply, or at least a reduction in the rate of its growth. That's a hard one to get your head around. Is he basically explaining fractional reserve, like banking and lending here?
A rise in interest rates causes a reduction in lending and contraction in the money supply, or at least a reduction in the rate of its growth. Yeah. So this is literally Keynesian economics at its finest. And this is what the Fed does, really. And this is what's been happening with since 2008, especially. This is kind of what's been happening every 4 years. So obviously in 2020 with COVID, they dropped interest rates down to zero. And then that meant that they could print, everyone could whatever it's called, like basically get a new loan. New loans all over the place at 0%. And that's for about 5, 6 years, 7 years. So they're coming up in like 25, 6, 7, and what I was showing in one of the previous episodes. And then obviously inflation just got out of hand. And so that's when they were like, we have to stop inflation. And I don't know if you remember, but like that was 2022. They were like, we've got to get this inflation under check. And so we're going to do anything possible. They were saying this. We're going to do everything possible to get inflation under control. And so that's when interest rates went up to like 5%. Right. And that creates this contraction of money supply. There's less people borrowing because the interest rates are higher. Yeah. More people saving because there's higher interest rates.
And when more people are saving, that means that more money is held in the banks. Is that right?
Yeah, it just means that there's less money floating around, basically.
Yeah.
So that's kind of what it stops inflation, because there's also the velocity of money which comes into like inflation and things, and the price of things, because there might be like $10 in, let's say there's $10 in the system, in a whole, this mini world sort of thing. There's only $10 in there. And so the GDP, gross domestic product, like that would be the total amount that is spent that year. If those $10, let's say there's like just me and you had $5 each or something, if I buy something from $5 for you, then that would be $5 that have moved. And then you want to buy something for $5 from me, that's $10 that has moved. So even though there's $10 in that system, the GDP is $10. Whereas if we are buying things all the time, I'm buying $5 from you, $5 from me, $10 from you, the GDP can be way bigger, sort of thing.
Right. So it's total amount of transactions rather than the total amount of money.
That's it. That's what the GDP is. And so this is like the Keynesians thinking, they want people to be transacting. And that's why they're like, if we're in a system where things are going to get cheaper, people are not going to be moving their money around as much. They're going to hold on to it. And that could completely destroy the whole system. Whereas the only thing they're really interested in is like GDP and stuff. And this is where,
which is how much of total money is spent.
Exactly. So whether it's on war or whatever it is that they've spent it on, whether it's £1 billion spent on creating amazing new technology and businesses that help everyone, or whether it's £1 billion spent on war, that's all the same £1 billion in their eyes. They don't see it
bottom line.
Yeah. They don't see it as any different.
They measure things by numbers rather than like actual innovation, progress. Yeah. Interesting. Yeah, it's a very kind of like, it's a very non kind of emotional, it's a bit of I can see how psychopaths would thrive in that system, because it's not about bringing anything good into the world. It's just about pure numbers. Like, it's just number go up.
Yeah.
It's number go up, and the Fed is like the biggest shitcoiner of all time.
Yeah, let's see if I could just get the like interest rate. There you go. So share this. So was it like 2008? That's when like the housing crisis happened. And then so yeah, it was basically at crazy low levels all this time. So it was like kind of unheard of, just to try and get the economy back on track. So
yeah, so it's flatlined there basically.
yeah, and the reason it's so low during this time, this is basically like unprecedented. Like if you literally look, this data goes back to 1955. There's never been a time like this.
Yeah, bro.
And
Look
this
at
is why
1980. 80 is like
yeah, so
almost
this is
20%.
this is what everyone is talking about right now. Everyone's using like this fractal here and saying the same thing is about to happen. And the reason is because so obviously 70s, so you know what happened in 1971, the money got removed from gold. And so inflation kind of went crazy during this patch of time. So this is why there was a big spike in interest rates to try and get inflation under control. Then it started coming back down.
Right. Okay.
And they were like, yeah, we've done it. We've cracked it. Like inflation's under control. And then it went, and this is the whole like Margaret Thatcher era and like crazy high interest rates. Whereas at this time you could still buy a house, you know, like in London. So I think this would be around the time that my parents would have been buying houses. Would that be right? Yeah, sometime around here. So they would have been living in London, but they could buy a house for like 40,000 or something, you know, which today is worth 600,000, you know, for the same house, probably more actually. But you did have to pay crazy high interest. So you couldn't take on a big mortgage because otherwise your interest rate would be insane, you know. And then basically once they sort of got inflation under control, as they call it, and they talk about this 2% target, interest rates have just slowly come down. And then it got here, 2000, that was the dot-com bubble, big crash in the stock market. So they lower interest rates, get the economy going again. Inflation starts coming back in, like, oh, we better rise the interest rates. And then this is where the whole mess happened. All this kind of space here where there was insane lending for property at that stage, or for real estate. And then during this whole time, it's been the whole economy has been an absolute mess during all this time, whereas no one's really noticed because they've artificially kept the rates at a crazy low period for a crazy amount of time, sort of thing. So that's what, like 2009, 2016, and then so 2019. So obviously 2017, that would be Bitcoin here was going bananas. This is when it went to like $20,000 from like 1,000 or whatever it was before. And during this time, the stock market was doing a similar thing. Inflation sort of getting out of control again. So Trump's in charge at this stage as well. He came in 2016. So this is during his era where they were increasing the rates to try and get inflation under control and everything. And then boom, COVID happened. And it just went literally to zero. Like, and I don't think that had ever actually technically happened. I think it had been pretty close. But during this patch of time, it was actually zero for a patch of time somewhere around here.
So they dropped it to zero. Does that basically mean
the economy into borrowing, doing stuff like move the economy? Because obviously, like, no one's even working during, like, businesses are closed down all this sort of time during COVID. So it makes zero sense. But if you get a stock market chart up, it's still going, like, there was a big drop and then it just like, but it was mainly just supporting the Mag 7 and the big 7 companies, and they're the ones that were still doing all right. Well, all small, medium-sized businesses were absolutely destroyed during this time. And then inflation got out of control. So they're like, right, 2022, let's raise the interest rates. They get it under control. Starts coming off. So what's this? August 2024. So if you remember, at the end of 2024, Bitcoin had, like, what was it? November 2024, Bitcoin went from
like 70
to 100, basically.
Yeah,
roughly. Like, it went a bit more, a bit less, and stuff. And so that's when interest rates started cutting, because people were like, oh, interest rates are coming down. Like, everything's going to go crazy. Like, and this is what everyone's been waiting for. Whereas at the moment, everyone's playing this fractal. They think they're going to cut interest rates.
Yeah.
They're not going to get inflation under control, and then they're going to raise the interest rates crazy high. Whereas what I think is going to happen, based on from what I'm seeing and what I'm hearing about stuff, is inflation's not going to go crazy spiky anytime soon. It's going to actually, the opposite is going to happen, where like everything, you can already see it from job revision data. Again, I've spoken a lot about this on previous episodes and things. There's been so many job cuts. There's been like if you look at credit card delinquencies and like people that are searching for things like selling their house fast, like people are in trouble right now. And they're not going to then go, oh, let's raise the interest rates. Like that makes no sense. What's more likely to happen, in my opinion, is interest rates are going to drop even quicker. Well, September, today, there's a CPI today, 17th of September, it's going to drop another 25 basis points today. So you can see here it's been flat since, February, January.
What's 25 basis points? Is that 0.25?
So it'll go so it'll go down to like 4, I think it is. So at the moment it's about 4.25, and it'll go down to 4. But you can see like on this chart, nothing's really happened recently, whereas it's going to change today.
Yeah.
For the first time in 6 months. And I think I think we are now at that cusp now where probably we've got another few months. Again, this is speculation. This is just from random stuff that I've taken in. I imagine things are about to go a bit crazy, like that blow off toppy phase and things. And then we'll find out we're actually already in a recession. And that's when that whole debt unwinding spiral thing that I've spoke about, where people can't afford to pay for their debt and the interest rates are way higher than when they were refinancing here at 0%. They're now having to refinance higher, and they're just not going to be able to. So they're going to have to sell assets, whatever it is, stocks, bonds, real estate, gold, Bitcoin, everything. Like everything's going to have to be sold to just keep people afloat and pay off, or and then people are just going to end up defaulting, and then that creates that spiral of this like unwind basically. So I can then see that happening, interest rates going back to 0, and then that's where the big print comes, what Lawrence Lepard talks about. Yeah. So, and like this
and when do you think that's coming? When do you think the big print is?
That's what I mean. I think it's way sooner than what I think people are still thinking, oh, we've got a few years left of this. Whereas, to be honest, I think we're literally a few months away from this blow off top. You can already see it with gold. It's already happening. This again, I've spoken about these cycles and stuff before. Gold tends to follow an 8-year cycle, but every 4 years it has like a half year, like the half cycle. So the 4 year, like every 4 years basically. And I think that will be the 4th year. If you look at gold, the last 4 years for gold, it's gone crazy. And that'll be the 4-year spike. So rough time frames, sometime by the end of the year, I think will be the top.
Interesting.
Could be like, obviously it's a market, so no one really knows what will happen. But it could go into the start of 2026. And then I think by the end of 2026, that will be a big buying time, which I've sort of said to you a few times. For everything. For
every obviously sound asset.
But yeah, I think Bitcoin's going to far outperform everything. But I also think, yeah, like you say, I think gold as well during this patch of time. Gold tends to follow these. Let me get a gold chart up because it'll just help explain. Gold tends to follow these, like I say, sort of 8-year cycles. There's been these lost decades before. I don't know if you've ever seen that in the stock market.
No.
And people are adamant. They're like, no, that's not happening again because it's all changed since 2028, like 2008. It's there's no way we're going to have a whole decade where the stock market. But I think this could be that decade from whenever this peak comes in now. So, I mean, have you seen the stock market? Like, it's mad.
What do you mean, like overinflated?
Yeah, it's just going crazy at the minute, and no one even seems to know
Know what?
that the stock market is doing this. Like
Okay.
even people that you speak to that are into this sort of stuff.
I mean,
Oh, sorry,
I
you can't see
remember
my screen, can
noticing.
you?
I remember noticing during COVID and stuff, where it was like, okay, they've just shut everything down. All of these small businesses are closing and they're printing loads of cash and giving people free money. But looking at the economy and the charts and the markets, everything was healthy. I was thinking, well, this whole thing has to be fake then. The whole market has to be propped up artificially fake, because you can't just shut everything down, print a load of cash, give people free money, tell them to sit on their arse at home and not have any kind of economic repercussion at all.
Yeah. What is this? It's Bitcoin. Why is it Bitcoin? Take that off. So yeah, gold at the minute.
Is this per ounce?
Yeah. So $3,600 per ounce at the minute it is. If you sort of look, so if you remember 1971, that was like the huge move for gold. Gold literally had been pegged, obviously, all this time at like $35 or whatever it was. It got taken off at 1971 and went from $35 up to like 800. I think the peak was somewhere around here. Then in 2008, that same sort of move. But if you look at like time frames, like I've sort of been saying, 1971 ish, it's around an 8-year time frame. So what, like 89, if you see on the chart there, this is like 84 bars, that's months. So roughly 8 years. The same thing here, somewhere around the low to somewhere around the high. I haven't probably picked like the exact part, but it tends to work when you look at things. When you look at these moves, that tends to be how it is. The same one, somewhere around 61 bars, about 5 years. Like I say, this is coming into that sort of 4-year window. Again, if you look here, like I sort of say here, that's 70 bar. Again, I probably haven't picked the right point. It's probably somewhere more realistically like around here. So that's about 4 years. You see 49 bars. So it tends to be this 4 years shakeout, then 4 years of grind higher. If you look at stock market, I don't really like getting into all this speculation stuff publicly because it's never going to work. It's never going to work well because people are going to. I don't want people to like be like, oh yeah, Mike said this. It's like I don't know. Like, I literally have no idea. But just from what I've been seeing anyway. Look at this. This is the stock market, and no one. People are like, we're starting a bull run. It's like, what world are you in? Like, how are we start? Like I was saying during COVID as well. That was that big. Oh no, that's not COVID. This is COVID. So here, that's like it was only 20%. So it only drops like 20%, and then during this time here, that's till October 21. Like so, up till like here, January. Like people were literally not even working all of 2020. Like jobs were literally closed, and the stock market's climbing.
Yeah, this whole thing's fake then.
But it wasn't. It was the money printing. They did an insane amount of money printing. I'll show you the money printing in a second, actually, because this explains it all. But yeah, again, you remember, like I say, a lost decade. So if you go from about 2000 roughly till, let's see, when it finally broke over that's 146 bars. That's like over 10 years before. So from 2000 till 2012, 13-ish is how long it took to then get back past its high. And people are like, that's not going to happen again. But this is literally what I can see happening here. And if you go back further, there's that same thing happening. Like, is it here? What's this? So that's the 30s. So that's the Great Depression. That took until 54. That's like, what, 50, 20, 25 years. 25 years. Obviously, that's a huge one. But I feel like there was another one somewhere, maybe somewhere around here-ish. What's this? 68 until 82. So yeah, that's like another 15 years. So there's been numerous of these like lost decades, as people call it, as the term's going on. And that's what I could see happening here. I could see this being like brutal for stocks. Whereas you speak to like most financial advisors, is like just dollar cost average into an index fund, and like,
S&P.
you're going to be absolutely fine. So are you? I don't know.
Yeah.
Like, it could be fine. Like, I think if you do it over the long, like, if you're in your 20s, 30s or whatever, and you're planning to retire at 60, 70, then sure, eventually. And if you'll still carry on dollar cost averaging during this whole decade that is lost or whatever, then fine. But I don't think most people want to do that.
No.
Whereas I think gold and Bitcoin are the ones where, and this is the fourth turning as well. This is and this is what tends to happen during the fourth turning. The sound money assets are the ones that do better. What's it called? The M2 money supply. That's global. This one. So yeah, like during.
So is that the amount of dollars in the world, or is that the amount of?
So M2 is the.
Is it all currency?
It's only
all
US. It's Federal Reserve. So, but it's the biggest one. It has the biggest impact by looking at this. You can get like the global ones and stuff as well, which is going to be more useful for things like Bitcoin. But the point is like from here, what was it, like 15 trillion, and it went to like 21 trillion in basically just over a year. So they added 41% of all money. And then this is that, like I was saying, the interest rates that came off. What the interest rates rised here, remember? So this is where they spiked, and this is where the quantitative tightening, as they call it. So they were trying to run off the balance sheet a little bit here. And so, just looking at that, they have done all right with that side of things. But yeah, if you look at the global money supply, which arguably is more important, that's not the right chart. There is one that you can do it, but I can't remember what it is off the top of my head. But yeah, I think this is the one for me. The stock market. If you look, do you remember like recently as well, April, and this is where Bitcoin had a bit of a pullback as well. It's just that same patch of time, and people were basically saying like the top is in here, and then this recovery since, like, just, I don't know. To me, it's just like, look at that steepness of that angle of like, how long do you think this is going to go on for? And people are like, we're just starting the bull run. It's like, I don't think we are. Like, I really don't think it is. But I think by having, I'm never going to sell Bitcoin. That's the thing though, because you just don't know what's going to happen, like I say. But I definitely want to make sure I've got dollars and cash. Whereas if you say that to most Bitcoiners, they're like, you're going to keep dollars? Like, but they're just bleeding. But I do think over this next year or so,
you're holding a bit of cash to make some big purchases next year.
Exactly. Like I said, the house should be selling soon. And that is my plan, is I will still buy half Bitcoin and keep half dollars. I do think the smart thing, if you've got a really low time preference, you're thinking really long term, the smart thing is just to buy Bitcoin. That would be the smart thing. But like I said, I'm a bit of a degen, but I'm like half degen, half not. So
half Pepe coin,
I think if you're a full
Bitcoin.
degen, well, it's I wouldn't do that, but like as in,
Yeah.
I think keeping cash is a bit degen.
Mm-hmm.
That's my idea of degen now. Whereas for most
It's
people,
because you're a toxic Bitcoin maxi.
yeah, exactly. But yeah, that's definitely the patch of time
Yeah.
that I'm looking at. That's general time frame anyway.
Yeah.
Not
Watch this
financial
space.
advice at
Obviously, yeah.
all. But
Entertainment
it's just
purposes
what I'm
only.
seeing. Exactly.
Well, we'll see. Should we call it a day? Should we wrap up?
Yes.
Do you want to shout out shill your own channel?
Yep. Bitcoin straight up. Should have a video that's just gone out today actually, on the protocol. I think that's what it's called. It's like the one thing that really clicked for me. It's basically the blue pill and orange pill thumbnail. I quite like.
Oh, that sounds good.
The thumbnail. It's like you take the orange pill, you see Bitcoin for what it is. Take the blue pill, it stays the same. But I think that one's a really important one.
Yeah. Cool. I'll keep an eye out for that one.
What about your channel?
And Road to 1 Bitcoin on YouTube.
9% through. That is crazy. That's crazy.
Almost at 10. Almost at 10 now.
That's mad. How long is that in? Like April?
I started the channel in April, but I started at 3% because I had a big smash buy about the year before, about 6 months before.
So in 5 months, you've gone up 6%.
6%.
That's crazy.
It's pretty good.
And like original plan was to do what, like an hour of Uber Eats a week or something?
What? No, it was to do £100 a week.
£100 a week, yeah.
Which I've been pretty much doing. So,
whereas you've been more than double that, basically.
That's been a couple of £1,000 just from doing Uber, to be fair. So
that's crazy.
Yeah, we'll see. I'm going to change my plan. Once I hit 0.1, it goes into the second layer. I'm going to change my plan a bit. We'll see if we can do some other hustles. We'll see. Watch this space.
Excited.
Right then. See you next time, brother.
See ya.